Hello guys, I hope you are well. Welcome to our third session on financial markets. Today we will speak about crude oil. Crude oil is the raw material used to produce different end petroleum products that we are all consumer of, directly or indirectly. The reference market for crude oil is the Brent, which is quoted in London in US dollars per barrel. If we take Brent as a product, we should know that this Brent or crude oil will go in a refinery, and that this refinery, through a cracking method, will produce different end products called distillates. Some of them that we are all aware of are the gasoline, the jet fuel, the gas, the diesel oil, the fuel. These products, each of them will have a different quotation in a certain metric unit. It could be tons, barrels, liters, or other. We should bear in mind that there is not a direct relation between the price of crude oil and between the price of the distillated products. Why? I will give you one example. During the COVID crisis, all the planes were on the tarmac and there was no jet fuel consumption. So at that moment, what happened is that because of the specific supply and demand fundamentals on the jet fuel market, the jet fuel price went down and the crude oil price maybe stayed stable, went up or down, but there was not a direct relation proportionally in the price of crude oil and the jet fuel. We have similar conditions in USA during the driving seasons in summer, when the gasoline price might go up and the crude oil price go down, stay stable, or go up independently or with a slight relation between the two products, the raw material crude oil and the gasoline. So this is something very interesting that we should bear in mind, because many of us think that when we go to the fuel pump, the price that we will pay will be directly related to the crude oil price, and this is not the case because of the specific supply and demand fundamentals of the product, the end product that we are consumer of. In a trading perspective, one should know that traders will be specialized on one end distillate product or crude oil, but in some cases on both. This is very interesting because, as I told you, the relations are not proportionally similar or directly proportional from the crude oil and the end products. And that gives different market configurations for the traders to take position. Basically, there will be directional position that could be speculative or hedging or other, but in between the products there will be as well positions that a trader will take on the refining margin. The refining margin is commonly known as a cracking margin, and it is expressed in US dollars per barrel. So if we take jet fuel and crude oil, there will be some traders who will take a position on the precise margin between crude oil and jet fuel. And this precise margin will be called a crack. This crack could be positive if the refining margin is positive. It could be negative if the refining margin is negative. And so, a precise example. Imagine that a trader expects high demand for jet fuel. He would take a position, a long position on the cracking margin, because he will expect the jet fuel to appreciate proportionally more than the crude oil price, and vice versa. This is to bear in mind in case you would like to exercise one day of the activity of a trader on the distillates market. Last thing that I would like to share is that the distillates product that we see at the end of the refining on the right side of the table, they are mainly divided in two categories: light distillates on the upper part of the table on the right side, and heavy distillates in the down side of the table on the right corner. That's it for today. I hope you enjoyed. Please leave me your comments so I can see what are the next topics that you would like that we share together. Have a good day and all the best. Bye.